micro investing, it is a hot topic at the moment, and we get a lot of conversations and requests about what does it mean. And to me, as sort of running the business now for over 4 or 5 years, it's important to understand what micro investing is, but also what the underlying assets are. And the simplest thing for micro investing is what we're trying to achieve is through education and financial literacy, financial inclusion. And by micro investing, you're micro investing your whole. In the case of Raiz, you're fully invested for your first $5. So that is, you put $5 into a portfolio of your choice, and that whole $5 is invested. Now, just to back it up a little bit, maybe I explain a bit more about Raiz in a nutshell. And I use the word nutshell because we used to be called Acorns here in Australia, and that we launched in February 2016. There was, what happened next was massive and a positive surprise for us with the concept of saving and investing. Their virtual loose change in Australia had instant appeal, and we took the business we had a joint venture with Acorns Inc. in the US and brought it out to Australia. And sort of today we're sitting at the end of September 2020, so 4.5 years later, we've got 227,000 active customers in Australia using the app. And as I said, it's key it's a savings tool or a savings platform, but it breaks down the barriers for individuals to get into the stock market. And that's when the micro investing side comes in. So to me, micro investing creates the ability to get into the market through the Raiz platform, but also have a diversified portfolio. So we offer 7 different portfolios here in Australia. Each one of those are made up with anywhere from 7 to 9 ETFs, or if you're in the Sapphire portfolio, there's an exposure to actually Bitcoin as well. So micro investing creates that diversity, which is important, especially when you're beginning or learning how to invest.
Just a simple question for you, Brendan. A lot of people listening to this obviously love the convenience. And Kate and I are quite familiar with your app. People listening to this will think, okay, how do I pay fees? So what are some of the fees that people should be aware of? Sorry.
Yeah, fees definitely. And we talk about the Royal Commission in the finance industry over the last 18 months. Fees are important. It's the transparency that we try to achieve here, or I think we have achieved here in Australia, is you download the app from the App Store or the Google Play Store here in Australia. You sign up and you register. Once at the end of each month, depending on your account balance, so you might have $10 or $100 in your account at the end of the month, and we will charge you what we call a subscription fee. So you'll pay $2.50 for the month. And what that means is you can deposit, withdraw, but also switch investments across the different 7 portfolios as many times as you like in that 31-day period, but you're still only charged a subscription fee. The caveat to that is if your account balance becomes over $10,000, then we charge what we call a funds under management or account fee, which is the equivalent of 27.5 basis points per annum, which is charged monthly, and that FUM or the account fee comes out of your Raiz balance, whereas the $2.50 subscription fee for under $10,000 comes out of your actual bank account.
Right, so you'd probably only notice the subscription fee really, and once you get over that 10,000 hurdle, it's very much like just like a normal ETF.
Yes, well, a normal sort of funds under management model. Yes.
Yeah.
So when you're investing in Raiz, I know you mentioned ETFs before, but what ETFs are you actually investing in? Because it sort of seems from the outset you just put money in and it gets invested, but what are the underlying holdings as well?
So look, good question. So when we first launched, we had 5 different portfolios, and they were called conservative through to the aggressive. So there's conservative, moderately aggressive, or aggressive. Each one of those was made up of 7 different ETFs, and they range from Australian large caps to the Asian large caps, the European large caps, and US. There was some Aussie government bonds, corporate bonds, the Aussie market. They were the ones that we launched with. Sort of July a year later, we learned, due to our customer feedback, we launched a 6th portfolio, which we called the Emerald, or it's our social responsible portfolio. They have 2 ETFs in it that I just listed, but also they've got 2 more social responsible ETFs, one called RARI, which is Australian Responsible Corporates, and ETHI, which is the Global Sustainable ETF. And a lot of people say, yeah, that's great, Brendan, you're talking to me, but ETF. what an ETF is, and is an exchange traded fund. It's a type of sort of security, and this is my definition of it, so I apologise if it's not a technical definition. Type of security that involves a collection of securities such as stocks. So, and usually they track an underlying index. For me, it's easy to think of it as a shipping container. Think of a shipping container and then put all your stocks in it and close the door. That is an easy way for me to understand what an underlying index is. And an index can be a market index. It could be like the ASX 200 or the S&P 500 in the US or the NASDAQ. It tracks a certain segment of the financial markets.
So you're essentially selecting the ETFs and building portfolios to suit different risk profiles to sort of take all of the hassle out of investing and make it a lot easier for consumers.
Yes, yeah. And look, we've got, and everybody says that they've got professionals at work. We have an investment committee that has deliberately structured and spent a lot of time building these portfolios so that it does offer, the sort of risk curve or the risk appetite that a customer will choose if they choose to go in it. And as I said, we introduced the Emerald or the social responsible portfolio after launch due to our customers. And then even crypto or Bitcoin came to the forefront, and our customers said, hey, we have no idea about crypto, but can you give us some sort of exposure to it? So the 22nd of May this year, we launched the Sapphire portfolio, that it's made up of 7 of those ETFs, but it also has a 5% allocation to Bitcoin.
If someone's considering joining a micro investing app and downloading it and starting investing, what are some of the pros and cons that they should be thinking about? Are there particular things they should be reading or watching out for?
Look, it's important in any financial product, whether it's Raiz or just anything in general, and even a bank account. You got to read the terms and conditions. You've got to know what you're getting into. You usually read the product disclosure statement or the PDS. Even on the super side, if you're going in, you look at members' guides and PDSs. You've just really got to know what you're getting into. And people say to me, "Oh, I've inherited some money. What stock should I invest in?" And it's like, you don't invest in something you don't know. And even with the Sapphire portfolio here in Australia, I personally have never been invested in Bitcoin because why? Because I didn't really understand it. This was a few years ago when all my mates are getting into it. Yeah, but I'm not going to invest in something I don't understand. And I think that's a key point. Whereas, a mate said, "Hey, I've got $10,000 I've inherited. What stocks should I buy?" And I said, "Well, what do you mean? What stocks should you buy?" And he said, "Well, BHP, CBA." I said, "What do you mean?" He goes, "Well, that's what you do when you have money." And it's like, no. You have to educate yourself and take the time to read all the product disclosure statements. Even something from the Royal Commission is high on the topic in the financial services is fees. They talk about fees on the super funds and what's going to erode your balance. That's important. And that's why we make our fees transparent here in Raiz, but also we do a cleanup on a monthly basis to say, hey, Owen, your account, as an example, Owen, your account's $10. You are paying me $2.50 a month for that. Either use it properly or we'll close it. Here's the big red button, hit the close button. So, because at $2.50 over a balance of $10 is very expensive.
Yeah.
And we're not here for that. We're here for make sure that the customer has a reoccurring on. It's got the roundups on. It's got a reoccurring or a savings goal set up. Even use things like our Raiz Rewards program because at the end of the day, it's going to benefit the user. So you just got to be aware of what you're getting into, aware of how long periods. There might be lockup periods. There might be exit fees. Just anything like that.
Now, Brendan, one of the great things about micro investing, and it's really been interesting to watch as it's come to Australia, is the fact that it lowers the barriers to entry for investing. And one of the common questions we get from listeners is, when does it make sense to sort of graduate from micro investing to investing directly in shares and ETFs and starting to take a bit more control over your finances and manage your own money?
Kate, very good question. And the key is there that, and the philosophy of Raiz is lowering those barriers to entry to get everybody exposure or a piece of the market and understanding, because what comes with that is that education piece. There's no better way to learn it by putting either $5 in or $100 in and understanding it. We see people have rung us and said, the Daily Telegraph tells me 35 billion wiped off the market. Well, what does that mean to me? It was 0.5% or something like that. So it's by doing it is the education. And I don't think there's a need to graduate from something like Raiz. There might be you might diversify out of Raiz but leave a balance there. But if Raiz is working for you to get this sort of savings habit and awareness of your of your spending, and that's one thing that sort of surprised me and the feedback we've got from customers, because your transactions run through Raiz, people are being aware and being honest of where they're spending their money. The guys okay, look, I have $1,000 on my credit card at the end of each month. I usually just pay it. It could be $900 one month or $1,100 the next. I just pay it because it feels right. What Raiz does is list out those transactions for you, and you can spot if something's a lot is not what expected. And one of the guys here in the office actually cancelled his iTunes account 2.5 years ago, but he saw it come through because it was $2.99 at the time. He didn't know that he was paying $2.99 more. So he shot off an email with the confirmation of his closure back over to the iTunes guys, and they refunded the money. So I don't think there's a need for a graduation until you're very comfortable and aware and educated on both the market and also your spending habits or your behaviours.
I think it's one of those things where, we're often forced into false choices. This is my opinion, if you are comfortable using Raiz or something, like a micro investing app or whatever works for you, sometimes people will try and convince you that you have to choose one or the other. Oh, it's time for you to graduate, quote unquote.
Yeah.
Whereas, it's that old, why not have both? Why not?
That's it. It's not an all product, it's an and.
Absolutely. I think we've spoken, Kate, a few times about automating investing, because the really important things are just taking away the behavioral barrier that so many of us have when we're like, oh, if the market's going to fall, if it's going to go up, I don't think I could spend that money somewhere else. Like, there's so many excuses we can make up in our minds. And then we have this sense of like, we know that compounding is really important and we've got to add little bits often. What are the long-term benefits, Brendan, of automating investing?
There's a couple, and compounding is sort of the key one. I think it all comes down to behaviour. And it's the teaching or the having the ability to save, because that's going to benefit in the long run. And you think of the lifestyle, and I've just had a baby, so I've got to think about that savings ability or what I need for that. It's creating that habit. And one thing I'm very happy with Raiz from a point of view of many of our customers is some of them put in their whole paycheck, because they know that if they leave it in their bank account, they will spend it. So, yes, you can have your money back. You sell your ETFs. It takes 2 days for the ASX to settle those ETFs. Then we transfer you the money. So that impulse buy sort of thing's disappeared. But it forces people to save a bit more. So I think if they can get in that habit, everybody says they've got a budget. 70% of our customers surveyed say, yes, I've got a budget, but I haven't kept to it. Or people say they build a budget and then whatever's left over the month, then they'll invest. Never happens, never works. But by doing a function or an automated savings, either around the roundup function or a reoccurring deposit, that savings is happening inside the budget, not to the right of it.
Yeah, absolutely. And it's really important to sort of take out as much friction as possible when it comes to sort of investing for the future, because everything we add to it, every thought, every choice, it sort of adds that extra layer of friction and stops us from actually making any decision or taking action. And we can just go for years thinking that we want to invest and never actually doing it. So I think it's really a great idea to sort of dip your toe into the water with micro investing apps like Raiz, just to have that experience and sort of take away those barriers. And I think that's really interesting what your team are doing with really focusing on that behavioral psychology aspect of having roundups where you don't even think about that money coming out.